Hello guys, in this video I'm going to be looking at how to trade reversals in the market. So let's start with some illustrations on this chart. Okay, so in a situation where we have price moving downwards, making it lower lows, higher lows, lower low, higher low. So at the point where price turns around to the upside, that's where we're looking to take our entries from, then follow it through. So mostly this could be the beginning of a very long trend, or the beginning of an uptrend. That's if we were in a downtrend before, but now if it turns around, it could be the beginning of an uptrend. So let's look into the entry models and the criteria that we're going to be needing to take this reversals whenever we spot them. Okay, so in this scenario, we have I have this illustration here to be looking at. Making price, you can see price making lower low, higher low, lower low, higher low. Made lower low again, then made a higher low. Then this time round could not make a lower low. So from this point on, we had price breaking this structure. We had this price breaking this structure right here. So what we are interested in is to trace this back to the origin where price started from to cause this change of character or break of structure, whichever one you call it. So from here, where we are interested in is the origin of this move that caused the break. So the origin could be somewhere here where you look out for the last indecision candle before the break or before the impulse move. So this will be the demand area. So in this scenario, what we want to be looking at or looking after we've located or identified the demand area is also to look out for an area of inefficiency, or what we call the fair value gap or imbalance. So so to make this demand area valid, we want to see an area of imbalance also attached to it to make the demand area a valid area to consider in terms of taking a trade from there. So this is what we want to see. So if we get a scenario like this, we had a break of structure or change of character. Since that is the first break that we had this change of character, so once we identify this, we now look for the origin of the move that caused the change of character. So that is somewhere here. So from there, we look out for the demand the demand area, and also identify an area of imbalance. So with that said, this is where we target to take our trade. So for instance, we are expecting a reversal from here. So this is the zone that we want to take a buy. It has been in a downtrend previously, and now we are expecting or anticipating a turnaround to the upside. So we want to only consider taking the trade from imbalanced demand zone, and that will be exactly this area here. Okay, so from there you could either use a buy limit just by placing your trade right from here, and then your stop loss goes below the zone. Your stop loss goes below the zone. So in this kind of scenario, you could be targeting some areas, previous highs, as the market makes its way to the upside. So this over here could be one area. This could be one area we could be targeting from this point to this high. This is another area we could be targeting. So from this high to this high, and then so forth. So in So if we identify the previous high area, we could perhaps trade and run our trade all the way to the previous high points that we can identify on the charts. The previous high point we could identify on the chart. So, for instance, if you take a trade from here, in this particular scenario, we're looking at 16:1. So we're risking, let's say, 1,000 for 16,000 in this particular illustration that I've made here. But ideally, you could target 2-to-1 risk reward to be on the safer side, or if you want to enjoy the whole run of the move, you just look for the previous high and then maybe you leave it to run as the trade moves to those targets. Yeah, so this is the scenario that we want to be looking at, or we want to see in the markets. So in areas like this is where you want to be taking the reversal from there. So in this from here, we'll just move straight into the real chart and then we can pick things from there. Let's go straight into the real charts. Let me take this off from here. Let's take this off from here. Delete. Let's clean this off so that we wouldn't get in our way as we go through this. Okay, so we have price action here. We have a price action right here. So from this point on, we can clearly see that price has been making higher highs. So from this point, we started from here. Price made this high, pull back to this low, to this high, this low. So we can clearly see that we are in an uptrend. We are in an uptrend, as we can see here, where price has been making higher highs, higher low, higher high, higher low. So this is a higher low, because the reason being that this high is higher than the previous one, which is this one. This high, this higher high point here is also higher than the previous one, which is this one. So that's the reason why we call it higher high and then higher lows. That's a typical characteristic of an uptrend. Okay, so now we have this move here. If I should go back, so this is a typical trade which I took with my community as this happened here. So this in itself was a news event that caused this. So we targeted this high here. So we took the trade from here, and the target was this high as we had this wick filled. All right, that aside, we are on a different matter today. So let's look at how we can identify some of these reversal points on this example that we are looking at here. So I'm going to play the chart and then we'll see how we can see and take advantage of this scenario. So in this particular one, the one we're looking at before was a downtrend. So in this particular one, we have an uptrend. So we're looking to take a trade downwards. So let's play and then see how we can spot an opportunity and then take it from there. Okay. So price is still making higher highs. So in this scenario here, let me pause this. In this scenario here, is it paused? Yeah. In this scenario here, we have an uptrend, price making higher highs and higher lows. So where we can identify that there's this recent break of structure. There's this recent break of structure here. break of structure right there. So with this break of structure here, the origin is from here. So what we have to do is trace it back to the origin, the guy who caused the break of structure. So this will be our demand zone since we are in an uptrend. So with this demand zone, we can also identify some imbalance attached to this demand zone right here. So that imbalance also, we expect it to be filled. We expect it to be filled before we continue to the upside. So that's an imbalance right there, imbalance. So we can see how price has tapped into this imbalance demand zone. Since we are in an uptrend, we had the break of structure here. We expect price to come back to the origin, which it has done. Okay, so if we're taking a trade from here, that would be another buy entry right here. Stop loss goes below here. The reason being that we expecting a trend continuation from this point on. So if price breaks below this zone we've marked, we're not interested to still be in the trade. So from here we could go in for 2-to-1 risk reward. 2-to-1 risk reward, which from this point itself, it has already hit the target. But let's target the high of this area and see if we could get it. Let's target the high of that area. Okay, let's see what happens in this trade. We had a revisit to the zone. Okay, that is done. So that hits the target right there. The target is taken out right there. So, but over here, our aim is to find a reversal area to take a trade from. So let's clear the charts right from here and then continue playing it and see where we can take advantage of a reversal. A reversal. So as we can see, we have been very bullish on this market. This is gold. Okay. So we've put in this low here. We've put in this low point here. So if we have this low taken out, if we should get this low taken out, this could be something that we've been looking for. Let's see. Okay. So that low has been, let's see. Okay, so let's see if we have a yeah, so we can see that this low, is it taken out? Not yet. It's not completely taken out because we need to have a body close below this low point that was put in. But at the moment, it was just a wick, just telling us equal lows, and then liquidity sweep. That's another topic on its own. So we continue play this and then see how this will come out. Let's see. So now our new targets will be here. I can see. Okay, we're still going up. We're still going up. So all these things would have been a tradable opportunities to the upside. But here our focus is to find an area for reversal, an area of reversal. Okay, let's pause this. We have a situation here. So right here we can see that we have this low taken out. We have change of character right here. We have a change of character right here. as we have the market closing, full body close below this previous low that was put in. So with this, we'll mark our zones right from here. We can see that the move that caused, we want to see the last indecision candle that was put in before the move that caused this change of character. So I will pick on this candle here, this whole candle right here, that candle right there. So that now becomes a supply zone. A supply zone. That's the only thing that makes this place not a valid one, is where we don't have an imbalance attached to it, this zone. We don't have an imbalance attached to this zone. But whatever the case is, we have a break of structure here. So let's see how this plays out. So in a scenario like this, we want to see, so the imbalance is what most of the time will cause price or will attract price to come back to the zone. So we've had this area, this previous low taken out. So let's see if we could, so in this scenario, we will have a sell opportunity right from here, and then our stop loss will go above this zone. So we have a sell opportunity right from here, and then okay, so we'll play this and see if we get tapped in. Okay, I think we've been tapped into the trade. All right. Okay.
I don't understand your request. Could you please refresh?
Okay. So right there we have a reversal, a typical example of what we're looking at. So we had this break of structure here, and the origin is where we marked here. So from this point on, we had price coming back to tap to revisit the zone before dropping below. So from this point, we can see that we've had this tap in to this particular trade here. So if we go, we're going for, so currently we stand at almost 7 to 1 risk reward at this point in time. And also we've had another break of structure. So if we should take this out, so we've had this trade being profitable. So now we have another break of structure right here. So we'll put this one aside, and let's look at the fresh one that we have, which is more practical to what the illustration that we had earlier on. So with this move down, we had this as the indecision candle before the push down, before the move down. So this is the area that we had a break of structure. So this is the break of structure right there. A break of structure right there. So with this break of structure, we now have to originate it to where it started from. So the origin is here, and then attached to this origin, we can see this big area of imbalance or inefficiencies that we can see from here. So in anything, this is where we'll be targeting to take a sell from once again. We'll be targeting to take a sell from. So if we're targeting to take a sell from here, our stop loss goes above the zone that we've marked here. our stop loss goes right above the zone, so we could target this previous low. So now let's continue to play and see how this works out. Let's continue to see how this plays out. If we will get to tap in or not. Do we have a tap in? Okay, yep, we have a tap in now. We have a tap in into the trade. So let's see how this works out. Let's see how this works out. So as I said earlier on, this could be the beginning of a downtrend, as we were in this area of in this zone, and we're in an uptrend before, so we're looking for a reversal. So this first of all gave us this change of character, which we took a trade on. Then we had another change, a break of structure, so we had a new area where we targeted, and this was it. So from this point on, so this was the previous low points that we could have targeted. This was the previous low point that we could have targeted. So the aim is to initially target 2 to 1 risk reward, but in a situation where we have a low target zone, we could target. So we could have marked here. So looking at this area, we had a break of structure here as well. Where is my tool? We had a break of structure right here. We had a break of structure right here. So with this break of structure, the origin, let's mark the origin. So this is the last indecision candle. Let's stretch it to the right. The last indecision candle being our demand zone. And then attached to that demand zone, we can also see this imbalance area, which acts as a magnet to attract price or to draw price to it. There. So from this point on in our reversal trade, this could be the area to target. This could have been the area to target, or this. So you can see how price, after we had this break of structure, went all the way up and has come back to tap into this particular zone again. Yeah, so on this trade, so we got filled up to this point on. So that is how we could take advantage of reversals in the market. So there are 3 key concepts that we've been looking at here. So the first one is the market structure, where I marked the higher highs, higher lows, higher highs, higher lows in the illustration I made earlier on. And then also the second concept is the supply and demand area. So as we have a break of structure, we want to identify the areas of demand where the move started from. And attached to those areas of demand and supply, we want to see some imbalances or some inefficiencies, market inefficiencies, also attached or around the area. So exactly that's the condition we had here. So as I said, the reason for entering the trade here was because of this zone. We had a break of structure, and then we marked this zone as our area to enter the trade. So if price breaks above this zone, then we are no longer interested to go in for that trade. That's why we have our stop loss right above the zone. And if it's a imbalance demand zone, our stop loss will go right below the demand zone as well. So now we had, from this particular one, we had our stop loss right above the imbalance supply zone, and then we had this nice move down to the previous area or the pending area which was there. This was a pending area which was waiting. So we had this break and price went all the way and it came back to revisit it, and then so this is how to take advantage of reversals in the market. So this could be something that could be on the opposite side as well. You could find the same thing on the other side. So this will now be a demand area. This will now be your demand area. You take the trade from here to the upside. Take the trade from here to the upside in this. So I've just inverted this thing. So this, in a situation like this, we had a downtrend, price moving downwards, making lower lows, higher lows, lower lows, higher lows, lower low, higher low. And then at this point in time, we had, let me take this one off. We had price making its first move to break above this previous high that was put in, causing a change of character. So we then marked our demand zone. Price came into that zone and then pushed up again. But over here, we did not have imbalance attached to this. We couldn't identify any imbalance attached to it. So it is on this second move up, which caused this break of structure, that we had the demand zone and then a big imbalance or fair value gap, whatever we call it. So from this point on, price came back into the zone and then tapped us into the trade and gave us a nice push up. Okay, so that is a downtrend example, how a downtrend one could be looking like. So let's just be on the lookout for some of these criteria as it plays out. Okay. Okay, so so we've gone through the basis of the basics that we need to know to get a nice reversal in the markets. Nice reversal in the markets. Since from this you could get a very good trade entry, because that is the beginning of the move. Normally that's the beginning of the move. So with this you could get into the trade early and then ride on as price makes its way up. You ride on as price makes its way up. So I believe this video will give you much value or throw more understanding to how you can take advantage in this kind of market reversals, because these things happens almost every time. And this I've shown you, you can spot it on any time frame. You can spot this on any time frame. So it's not just on this particular time frame that I'm working with today. You can identify this and spot it on any time frame. So I hope you enjoyed the video and then it makes much difference to your trading. Thank you, and then catch you up on my next video. Bye.